Welcome back to the IB Investor channel. In this video, we'll go through the holding company, Industrivärden. Before jumping into more details about this company, I just want to highlight that holding companies are a little bit different compared to regular companies. And that is because they don't report sales, they don't have margins, they don't have PE ratios in the same sense as, for example, Atlas Copco or Volvo. So this presentation of this company will be a little bit different compared to many others. The company was founded in 1944 by Handelsbanken. It currently has a 126.7 billion Swedish kroners market cap. It offers a 2.5% dividend yield, and it is owner operated by the Lundberg family. And as you can see here below, the Lundberg has roughly 20% of the capital, and then the Lundberg family additionally owns 3.2% of the company on top of Lundberg. So the Lundberg family is a strong holder and owner of this company. Now for the first portfolio company, which is Skanska, and it's been controlled by the company since 1978, and currently it accounts for 3.48% of Industrivärden's total portfolio. It is a global construction company with presence across the world, including US, Sweden, and obviously the Scandinavian countries here. The company is a pretty big one at 61.5 billion Swedish market cap, and currently it offers a 5.12% dividend yield. Now for Volvo Group, which is the largest company in the portfolio that accounts for 29.71%. It's been owned since 2009, which is quite recent, and the company produces trucks and construction vehicles. The company has a market cap of 453 billion Swedish kroners, so one of the biggest companies in Sweden at the moment. And it also offers a quite hefty dividend yield here at 6.3%. Sandvik is the second largest portfolio company here with a 24.2% weight of the portfolio, and it's been owned since 1997, so quite some time here. It's a global tools and mining equipment manufacturing company. It has a market cap of 244.8 billion Swedish kroners, and it currently offers a dividend yield at 2.6% here. Now for Alleima, which is the smallest company I believe in the portfolio here, and it was recently spun off here from Sandvik. So it currently sits at a 2.46% of the weight of the portfolio, so quite a small one. And it's a global specialized steel manufacturer. Right now it has a market cap of 17.3 billion Swedish kroners, and it offers a 2% dividend yield right now. Now for Essity, the company was spun off from SCA in 2017, and it accounts for 13% roughly of the portfolio weight here for Industrivärden. And it's a global health and hygiene manufacturing company, and it has a market cap of about 180 billion Swedish kroners, so quite a large player here, and it offers a dividend yield here at 2.8%. Now for Handelsbanken, which the company actually was produced from, if you will, and it was owned then since 1980. It accounts for roughly 15.4% of the portfolio weight right now. Handelsbanken is one of the largest banks here in Sweden, but it's not really a global player outside of Sweden. I think they have some offices in England, but aside from that, the focus is in Sweden here. It offers quite a hefty dividend yield here at 8.4%, and it has a market cap here at 189 billion Swedish kroners, so quite a big company here in Sweden. Now for SCA, the company that spun off Essity here a few years ago. So this company accounts for roughly 8.12% of the portfolio weight. SCA is one of the largest forest owners in Europe, as mentioned, and yeah, it's everything from harvesting its own forest land, sourcing timbers from other forest owners, and transporting the timbers to its industry. So the segment is basically industry and wood, so they're a large player here for sure. Currently a market cap of 109 billion Swedish kroners, and they offer a dividend yield right now at 1.6%, which is quite low for this type of company. Now for the final company, Ericsson here. So Industrivärden has owned this company since 1944, so I believe it's one of the oldest company here in the portfolio, if not the oldest. So the weight here is 3.28%, so Ericsson is actually quite a small player in this portfolio, but it's also reflecting on the share price decline that we've seen since the IT bubble. Basically, the stock has done pretty much nothing for the owners, and that's probably why this accounts for such a small share right now of this portfolio. It's a telecom equipment provider, and yeah, it's a very technical company. So they work within 5G, the fifth generations of like mobile networks, and the business model is to work based from telecom related products and services to deliver value to end customers and somehow continuously, develop its offering with the focus on the customers. But it's been a pretty rough ride for Ericsson. It just seems that they're, within scandals, one scandal after the other, so to speak. But yeah, anyways, I digress. The company has a market cap of almost 170 billion Swedish kroners here, and it offers a dividend yield here at 5.4%. Now for the share price development of this company, so we can see that it does have actually, compounder characteristics here, so it's not that volatile except for here. But we got to remember as well that the portion that Ericsson, or rather the weight that Ericsson had in this portfolio, was probably much bigger back then. So when Ericsson fell down here after the IT bubble, I'm sure that the Industrivärden just followed suit. But we can see here that it is cyclical. So here during this period, the stock fell a lot. But as of late, the stock has done pretty well, and we can see here for the 15-month period here, the total return has been 630%, and total return here in this case includes the dividends reinvested. And for the 10-year period, it's been 202%, including dividends. And for the 3-year period here, it's been almost 40% here, including dividends. So quite a good return. It's not the fastest, certainly, but it's certainly not the worst. And across the period here, we can see that from the 1990s or 1980s, actually, the stock has returned roughly 1,200% without the dividends here. More dividends here, and we can see the development here for the kroners per share here in dividends, and we can see that it's been pretty steady for a few years, but it's not a fast grower. So this is not even 10%, it's like half, it's like 5% growth or something like this during this period. So quite a small growth from year to year here. And they also decided here in 2020, not to pay any dividend from the, fiscal year 2019. However, in 2020, they did pay out some extra dividends here, it looks like. So, not the fastest dividend growing, but it is pretty steady, but it's not sustainable, it seems, since they did quit the dividend here. But the company offers a 2.5% dividend yield right now, so it's not bad, but it's not super high for this type of company either. And here we can see the dividend hike here for the most recent year here at 7.4% increase here. Now for a quick overview of the portfolio companies. So here on the left, you can see the names. In the middle here, you can see how much market value they have per company. And in the right side here, I think this is the important thing, where they actually display us how much cash flows they're getting, or in this case, dividends then from the companies. So we can see here that in total, we're actually getting as shareholders 6.4 billion Swedish kroners instead of the roughly half of that they're paying today in dividends to their shareholders. So they could raise the dividend by much more. So if we would just divide this by the market cap, that would offer a yield of roughly 5.1%. So that means that they currently offer a yield at 2.5%, so they could increase it in the future without being hurt too much. But they don't want to pay out all the cash flows here because they want to reinvest and they want to pay down the debt, is what they're saying themselves. But the potential here is at least that they do have the cash flows to cover higher dividends in the future if they want to. Now, this is the most important KPI for management here. So for holding company, it's not about sales, it's not about, the cash flows in a sense, but rather how much total equity they can produce each year. So this is the most important KPI. So they have to grow this every year. And if this doesn't grow, that means that the company is stagnant. basically. I mean, it's pretty obvious, but if it goes down, that means that the underlying assets are actually going down, and that means bad asset allocation from management. So as a holding company, the asset manager, so to speak, their only job is to increase this number here every year. It has to go higher. Obviously, it can go down if they choose to dividend some of this equity out, but if they don't, it should steadily go upwards. So yeah, but we've seen some off years here in 2018 where it went down, and this follows the stock market quite well. So if a holding company such as Industrivärden that only holds, you know, listed companies, then it will fluctuate year after year. So in this case, 2018 was probably a bad year for the stock market where it went down a little bit. And we remember past year here in 2022, it also went down a little bit. So it's strongly correlated here for Industrivärden how the overall stock market is performing, and especially their portfolio companies here, which are all listed. Now, this is also a very important KPI here. So this is the net debt. So we can see the development here over time. So we can actually see that the company came from a very high net debt situation here at 18.5%. I'm not sure why that is. I haven't read the report since 2014, but at least management has done a very well job here to reduce it. So this is one point where they want to use the cash flows, you know, to reduce the debt here so that, you know, the debt levels aren't spiraling out of control. The difference is, of course, that the Industrivärden as a holding company could sell off the assets across, you know, over the market, and that way, you know, reduce the debt. But I think that this company rather chooses to, you know, not pay out all the cash flows that they're receiving, but rather just keeping, you know, as they've done now, about 50% of the cash flow to, you know, pay down the debt and use for future investments. So, but really good job here for management to have reduced this net debt here, because these levels up here are quite scary, but a 4.5% net debt is not anything alarming right now. Now, as I mentioned previously during this video, that reviewing holding companies or asset managers, or as we call them, investment companies, it's a different story comparing it to, you know, making a video about Atlas Copco or Volvo, because you don't have the regular KPIs that are that important. You don't have net sales here, for example, which is perhaps a very important KPI for Atlas Copco, but for Industrivärden, since they don't sell anything themselves, it's a worthless KPI, so you don't monitor it, but rather you have to look at the net debt, and you have to look at the total equities, for example, as we mentioned during this video. So, you know, a little bit of a different video, but anyways, if you liked the video, please hit the like button and subscribe for more content. Thank you very much for watching. Goodbye.